As of December last year, Uganda's total public debt stood at 106 trillion shillings, that's 29.6 billion US dollars, up from 94.7 trillion shillings just 6 months earlier. That spike pushed our debt to GDP ratio from 48.3% to 52.1%, officially crossing to the red line set by the IMF. This surge in debt was largely attributed to increased domestic borrowing, but this has come with its consequences.
And remember, restructuring is no longer an option. We thought we could restructure. Debt with China, whatever came from Exim Bank, which is the bulk of our debt, is not for discussion. And even the multilaterals and bilaterals that have been with are saying, how do I restructure when the bulk of your painful debt component is in domestic debt, where you are not sure you can even engage in a restructuring?
When countries start to borrow to pay debt, to economists, that can be a dangerous situation that may be unsustainable in the long run. Is this where Uganda finds itself?
And this is what we promised ourselves 30 years ago, 40 years ago, that we are going to borrow, the economy will grow, we will be able to pay back. We have not found ourselves there. Now, it is time to do self-reflection. What went wrong that we're having to borrow to pay debt? Yet we had thought we would grow the economy, and out of those revenues, we will pay the debt.
50% of the budget is for debt servicing, according to the statistics we have. Then, how do you say that you're sustainable?
The government insists that it's staying on course, but with caution. Officials say future borrowing will focus on semi-concessional and concessional loans to uphold fiscal discipline.
Government, of course, will continue borrowing at a managed level so that we achieve the ambitious agenda that has been set out in the NDP4, as well as the 10-fold growth strategy.
These remarks came during the launch of the Maputo Manifesto Declaration, which highlights how debt-driven cuts to health and education are hitting women the hardest. Roana Habwe, NTV Business.